All right, tech enthusiasts, let's dive into why Synopsys caught everyone's attention today. Synopsys, trading under the ticker NASDAQ SNPS, has been in the spotlight following a less than stellar performance in the weeks since their last earnings report. Shares have dipped 6.2%, trailing behind the S&P 500. The big question on everyone's mind is, will Synopsys bounce back, or are we in for more turbulence? First things first, let's highlight the positives because, believe it or not, Synopsys did have some good news. The company reported better than expected earnings for the third quarter of fiscal 2024. Their non-GAAP earnings per share hit $3.43, comfortably beating the Zacks consensus estimate of $3.28. Revenue also saw a healthy 13% year-over-year increase, hitting $1.53 billion and aligning with expectations. But hold your applause for a moment. Despite those hopeful numbers, it's worth noting that the stock still nosedived. What gives? It turns out, investors are jittery about a few things. First up, the discontinuation of their software integrity business. This segment was sold to private equity firms Clearlake Capital and Francisco Partners for a cool $2.1 billion. While Synopsys sees this as a strategic move, divesting this part of their business can be unsettling for shareholders looking for stability. On the revenue front, there's a mixed bag. Time-based product revenues, which compose over half of their total income, were down by 2.9% year-over-year, even though their upfront product revenues shot up by 51.2%. Add in the fact that their North American revenues rose, but growth in regions like China accounted for a significant 17%. And you're looking at the bigger global strategies at play. The nooks and crannies of their financial report tell an important story too. Despite some positive numbers and robust geographic performance, the company's overall growth score sits at a disappointing D, particularly on the value front. The complex balance sheet, featuring nearly $2 billion in cash and short-term investments, but also a minor but noteworthy long-term debt, adds layers to the narrative. Not to mention, cash flow from operations saw quite a dip when compared to the previous year. So the ultimate question remains, is Synopsys poised for a comeback? With forward-looking statements showing modest expectations for revenue and EPS in their fiscal year and some confidence in cost management, there's cautious optimism. All right, tech heads, now I want to hear from you. What do you think about Synopsys' current predicament? Are you bullish on a rebound, or do you think more challenges lie ahead? Drop your thoughts in the comments below because your perspectives always add value to the discussion. That's it for today. Until next time, keep those thoughts rolling in and stay updated with the latest in tech news. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.